let's get started. All right, great. Looking into chapter 4, guys, let's look into a next chapter of another chapter of PM. In this particular chapter, we look into chapter 4 and get a strong understanding about this particular reading. Here we have activity-based costing to start off the proceedings. So let's get started with that. So activity costing is basically a costing method that allocates your overheads based on the activities that actually consume resources rather than just the production volume. For example, a furniture factory allocates the setup cost based on the number of machine setups for each product. Okay, so what it really means is that it's a costing method that allocates all the overheads. Now, first of all, what are overheads, guys? Any idea? Total of all the indirect expenses called overheads. Total of all the direct expenses, prime cost. Okay, so costing method that allocates your overheads based on the activities, that it allocates the overheads, right, based on the activities. That is why it is called activity based cost. It takes your cost and allocates it based on activity. Activity based costing. Right? The focus is on activity. Right? As we build you the understanding, you will understand it better. But right now, just to touch base, that it's a costing method which allocates all the overheads based on activity. That's why it is called activity based costing. Allocates all the overheads based on the activities. Okay. Why ABC was developed? Because businesses became more automated and produced many different products, making traditional costing less accurate. Right? A company making 100 different smartphones cannot fairly accurate overhead only using labor hours. So why was this method needed? Because businesses became more and more automated. Right? Because businesses became very automated and they started producing multiple products, and it became very difficult to allocate the cost using the traditional methods. So what was traditional manufacturing? Earlier factories produced similar products with high labor cost and low overheads. There was a very simple costing method that you could have used. But the transition period took place when automation started happening and product variety increased, causing traditional costing methods to become less and less reliable. Right? So that was about this. Modern manufacturing, today's factory use the machines, use automation, use tech, making overhead a major cost. Making overheads a major cost. Okay. So first let's look into this. First of all, what is activity-based costing? It takes your overheads, allocates it based on the activity. That is why it is called activity-based costing. Easy. Why was it needed? Because now modern day factories have become such that they are producing a variety of products. And if they produce a variety of products, what is happening? It's becoming difficult to do the allocation. And if it's becoming difficult to do the allocation, you needed a new method. And the answer was activity-based costing. Okay. Next, traditional manufacturing again, there was a single product produced at scale. So you could have this easily allocated everything. But now there is no single product produced at scale. How do you allocate? It becomes the challenge. So use traditional manufacturing. What's the problem with that? So we need a transition period. What was the transition period? Is that a lot of automation came, a lot of tech came, a lot of machines started coming, and a lot of variety of products being started were produced. And because of that, allocation became difficult using the old methods. So as a solution, a new method came called as activity-based cost. Okay, so this was the whole story. So if you connect with the story, you'll remember the topic, guys. Okay. What was the need here, Rakshita? Why did we need ABC? But why did you need activity? Because one business started producing a lot of products. One business started producing a lot of products. iPod also, iPad also, iPhone also, EarPod also, MacBook also. Variety of products being produced in the same factory. Now, how do you allocate the overheads to all the products? Before only iPhones were there. 1 lakh rent, they make 20 lakh iPhones in a day. So you could allocate the cost. Now you are making iPhone also, MacBook also, iPod also, iPad also, AirPods also, all in that same factory. And now the cost is being incurred. How do you allocate? That was the problem. Activity based. Now we'll build on to it now. Okay, so meaning is done, need is done, traditional we understood, transition period we understood, modern manufacturing we understood. Okay, now slowly we'll move on to the next parts here. Absorption costing. Here the overheads were allocated using the production volume. That was the traditional method. Absorption was the traditional method. ABC is the new method. Then it was allocated based on volume. Now it is allocated based on activity. When it was allocated based on volume, it is called as. It's like perfect example, if this class had 7 sections, people sitting, right? And a lot of noise was coming. It was difficult to allocate the noise per person because you don't know which section people are making the noise. But if only one section was here, I could have easily just allocated, yeah, this section is very noisy, they're all talking like that. But if the section C, B, A, Z, X, Y, everything is here, now what do you do? That is the whole problem. So before they were using absorption costing, now they're using activity-based cost. Before the allocation was done on production volume. Now it's done based on activity. Easy. Easy, 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 easy. Okay, indirect manufacturing cost that cannot be traced directly to one product. Okay. So guys, any cost that cannot be allocated to one product is called as an under production cost. It's related to the product, but you can't allocate it to one product. Indirect cost. Perfect. Perfect. Direct cost goes to one product. I know this one came in this product. Right? This came in this product. I can allocate, look at the product, I can find out all the cost, direct cost. But all the costs that went into making this, but I cannot allocate it to one single piece. Indirect cost. Add all that indirect cost, overheads. And related to production means production overheads. Related to the manufacturing process is called production overheads. Break it down, simple. What is overheads? Sum of indirect cost. What is indirect cost? Any cost that goes to a product but cannot be traced to one unit. That is an indirect cost. Add all the indirect cost, it's overhead. Overhead related to manufacturing process, production overhead. Overheads related to the manufacturing process, production overheads. What is overheads? Sum of indirect cost. What is indirect cost? All the costs related to a product but which cannot be traced to one single product. Indirect cost. Sum of indirect cost, overheads. Overheads related to the manufacturing process, production overheads. Easy. Okay. So what are production overheads? Indirect manufacturing costs. So indirect, that's why overheads. Related to the manufacturing process, that's why production. Indirect manufacturing costs that cannot be traced directly to one product. Production volume basis assumes that overhead cost increase as production increases. Okay, production volume basis assumes that overhead cost increases as the production increases. It assumes that the overhead cost increases as the production increases. What does it assume? It assumes that the production cost increases. It assumes that the overhead cost increases as production increases. Right? That means what? If I make one mobile phone, I have an X amount that will cost as indirect as the which cost? Exactly which cost? As a overhead cost, indirect cost. If I make one iPhone, the cost, all the indirect cost will be for one iPhone. If I make 5 iPhones, they're saying as you produce more, your overhead will go more. As you produce more, you produce 3, produce 4, you produce 5, you start producing more, your overhead goes more. Okay? So, if you make one Maggie, there's an X amount of cost. You make 5 Maggies, there'll be a little bit more. 5 times, if we were to say, that will be the cost. Make 100 Maggies, maybe a lot more. Okay? So, it assumes that overhead cost increases. Overhead is what, guys? Sum of indirect cost. It increases when your production volume increases. That was the assumption. That what your overhead increases when your production volume increases. Production volume increases, overhead increases. Production volume, overhead. Production volume, overhead. Production volume, overhead. Production volume, overhead. Okay? That was the assumption. It assumed that as your overhead, as your production increases, your overhead cost also increases. Traditional manufacturing environment, products were simple and overheads also were small. So simple allocation methods worked well. Back in the day, it was all simple. So you could have used easy methods. But now what has happened? High automation has come. So again, machines perform most of the production activities, reducing the manual labor. Rising overhead costs. Machine related costs have now become a large part of total production costs. Then there's a need for accurate costing because incorrect overhead allocation can lead to a wrong picture and wrong profit decisions. Right? So company has started to make a lot of different kind of products to satisfy the customer needs. And the products have also started to become complex. Different products consume different amounts of company resources also. So that's the major difference between ABC and traditional costing. That is absorption costing. ABC allocates based on activities. Traditional allocates based on production volume. This summarizes everything. We just come a circle again. Traditionally, it was called absorption costing. Now it's called ABC costing. Before the allocation was done based on the basis of production volume. Now the allocation is done based on the activity. Simple. Okay. So literally till here, it's just saying the same story again and again and again. That back in the day, they just added more layers. Like product have become complex. the construction, the manufacturing will become complex, all that will become complex. This, that literally means the same thing, that now you allocate based on activity before you allocate based on production volume. Okay, so now looking into done, 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 done. Three fundamental differences. We looked into this. Okay, this is done. Okay, all right, let's go. We're going to the next part here. Both methods collect overhead costs before allocating them. ABC costs, ABC groups costs by activity instead of department or volume. Cost allocation, traditional costing uses one allocation base. ABC uses several cost drivers. Okay, ABC has several cost drivers because there are several costs, so they have different cost drivers. Whereas traditional used to have only one cost driver, whereas now they have multiple cost drivers are there. So one is cost collection, one is cost allocation. So first you collect all the costs, then you allocate all the cost. Okay. First you collect all the costs, then you allocate all the cost. Once you collect all the costs, then you allocate all the cost. Okay, there are two stages to this process. First you collect all the costs that are incurred in a particular product, then you allocate all the costs. Okay, first you collect the cost, then you allocate the cost. Okay. First you collect the cost, next you allocate the cost. Collect the cost, allocate the cost. Two-stage process, collect the cost, allocate the cost. Okay, first you collect the cost, second you allocate the cost. Cost collection, cost allocation. Okay, first you collect the cost, second you allocate the cost. There it's a two-stage process. One is cost collection, one is cost allocation. Okay, one is cost collection and one is cost allocation. If you collect the cost, then you allocate the cost. Okay, collect the cost, allocate the cost. Next, we look into what is the cost pool. What is the cost pool? It's a group of overhead costs related to the same activity. Right? A quality inspection costs are placed into one inspection cost pool. What it means? A group of overhead costs all related to the same activity. Okay? A group of costs related to the same activity. That is a cost pool. What is the cost pool? A group of costs related to the same activity. Okay? So that is your cost pool. Where is the definition? Dollar. We got the foundation, we understood traditional, modern manufacturing reality. Okay, we are here. All right. So the groups of overhead costs related to the same activity. What is the cost pool? So two things you need to know, guys. One is the cost pool, one is the cost driver. Okay. A cost driver is a factor that causes a particular cost to occur. Okay. A factor that causes a particular cost to occur. That is called as a cost driver. And what is a cost pool? A cost pool is a group of overhead costs related to one activity. It's a group of overhead. What is an overhead? Overhead is the sum of all indirect costs. You add it up, it's an overhead. It's one group of overheads all related to one activity. You just take one activity and all the overheads related to that activity, that one group of overheads related to one activity, that group is called as a cost pool. Next is a cost driver. A cost driver is a factor that increases your, a cost driver is a factor that increases your cost. Anything that increases your cost. Like you, the more you do it, the more it will cost. Can we say the more kilometers I drive, the more petrol it will cost? So can I say kilometer is a cost driver for assessing the fuel? Right? So anything as I do more of it, my cost goes. You buy one samosa, there's an X cost. Buy two, cost. Another cost. Another cost increases. So whatever increases the cost, the pieces, number, the quantity is the driver for the total cost of your samosa. When you buy one, X amount of 5 rupees, one. You buy 50, there'll be 250. Right? So the quantity is the cost driver. Right? What drives your cost? The more, what do you do more of for the cost to increase? What do you do more of for the cost to increase? What do you do more of for the cost to increase? Yes. Okay, so that is your cost driver. So we understood what is the cost driver. Now we'll come to cost pool. So these are the 2 points we have understood. So one is a cost pool. It's a group of overhead costs related to the same activity. Okay, it's a group of overhead costs that is related to the same activity. That is a cost pool. Cost driver is anything that increases your cost. Okay, so we've understood this. Two important things, two stages and two ideas. That is cost pool and cost driver. So what are the two stages here quickly, Rakshita? What are the two stages? First stage is yes. Very good.
Cost collection before allocating costs by adding.
First you collect, then you allocate. Simple. First you collect, then only you will allocate. Okay. If you have to allocate sweets among all of you all, first I'll have to collect the sweets from somewhere, then I have to allocate. Right? First you collect, then you allocate. Two-stage process. Cost driver is anything that in any factor, when that factor increases, your cost increases. Okay. So that is your cost driver. Now what is your cost pool? Cost pool is a group of overhead costs related to the same activity. Group of overhead costs related to the same activity. Okay. A group of overhead costs related to the same activity. Okay. Next we'll look, ABC uses multiple cost drivers, absorption had only one cost driver. Okay, absorption or traditional, you will see there were fewer cost drivers. In ABC, you will see a lot more cost drivers. Okay. Next, volume related resources, non-volume related resources. Okay. So what are volume related resources? Cost that increases as production volume increases. Okay, so we have got with traditional, we've done cost collection, cost allocation, cost pool, support activity. ABC creates separate pools for indirect support activities. Okay, so as we do the sum, you'll pick that what does ABC do? It creates just separate pools for indirect support activity. There'll be multiple cost pools, no worries. Then what are cost drivers? Anything that increases your cost. And what does ABC do? It has multiple cost drivers. Easy. Instead of one single base, multiple cost drivers. Now coming to volume related resources. Cost that increases because of volume. Can I say raw material? The more I produce, the more will be the bill for my raw materials, right? The more coffee I make, the more the money I'll pay for the milk. Less coffee, less milk, more coffee, more milk. Easy. Yeah, volume related resources. Next, non-volume related resources. Costs that depend on activities, not the number of units produced. This is non-volume related. These depend on costs that depend on activities, not the number of units. Right? Costs that depend on activities, not the number of units produced. Okay? Costs that depend on activities, not the number of units produced. Okay? Costs that depend on activities, not the number of units produced, which is not related to the volume. Any cost related to volume, volume related resource. Any cost not related to volume, not related volume resource. It just comes down to does it relate to volume, does it not relate to volume. Okay, cost that increases as production increases is called volume related resources. Next, cost that depend on activities, not on volume. Okay, anything that depends on activities, not on volume is called non-volume related resources. Okay, anything that increases with production is volume related and the otherwise is non-volume related. Okay, done. Next, we look into setup costs, purchase orders. What about setup cost? What about purchase orders? Setup cost incurred every time production is prepared for a new batch. Cost incurred every time production is prepared for a new batch. Setup cost. Right? Cost incurred every time production is prepared for a new batch. It's called setup cost. Okay? Cost incurred every time production is prepared for a new batch. That is called setup cost. Okay? Cost incurred every time production is prepared for a new batch. So for you to set up, changing the machine setting before producing a new product, for you to set up the entire system, right? The cost of setup. What does it cost every time when you start the production for a new batch? What is the setup cost? Next is purchase order. The procurement cost depending upon the number of supplier orders placed. The next is procurement cost. What is procurement cost? Depend on the number of supplier order placed. So one is purchase order, one is setup cost. Now what is purchase order? What is setup cost? Now before you start manufacturing, you set the manufacturing setup first. Then you put the raw material. So now before you want to make a milkshake or before you want to make a juice, you'll probably go get the juicer first, probably just rinse it in water, just clean it first, then put it, set it up, or if you have the mixie setup, you put it on that, you set it up. Last thing is you put the fruits. Right? The last thing is you put the fruits for this. First you go set it up, get it from wherever it is placed. In my house, it's placed in a separate place. So I get it from there, I keep it on the slab, then I wash the mixer, put that, set it up. So there's a certain cost that gets for setup. Right? You have purchased that machine, so it doesn't cost you, just get it up, it just costs you in time. But for a big machine, what you have to set it up before. Right? You set it up, you put the fuel, you put check everything, whatever is needed, the energy, whatever it's going to consume. You take all of that. Okay, so that is your setup cost. Next is purchase orders. This depends upon the number of supplier orders that you have placed. How many supplier orders you have placed. That is called as your purchase cost. Now, okay, next is quality inspection. This inspection cost depends on the number of batches or inspections required. How many inspections are required? Okay, the number of batches or the number of inspections required. This is the next cost, quality inspection cost. So three costs we have understood, right? Setup, to set the manufacturing process, setup cost. Procurement or purchase order cost is basically the cost of you ordering from the supplier. Finally, you have your quality inspection, number of inspections. So can I say all these are cost drivers? If I do more setup, more overheads. So this is a cost driver. Setup is a cost driver. If I do more setups, more cost. It's a cost driver. If I do more inspection, more cost driver. If I place more orders, if we wanted 5 biryanis, let's assume from Meghna's, I can place one order and order 5 biryanis. Or I can place 5 different orders, one biryani. Where will be my delivery cost higher? Can I say placing order is a driver, cost driver? More orders, more cost. Yeah, the more orders you place, the more cost you'll have to pay for delivery. Right? So it's a cost driver. Anything that increases cost. One is the quantity of biryani. Right now, if we eat 5, that is a certain cost. Suddenly, we all want to eat 2 packs. Now that increases our cost further. The number of biryani is also cost driver. It increases the cost. Number of deliveries is a cost driver. It increases the cost. Okay, so setup cost. More setups I do, more cost. More orders I place, more cost. More inspection I do, more cost. All these three things are cost drivers. They increase your overhead cost. Okay. Next, ABC implementation. ABC is introduced through a structured process to accurately allocate all the overheads. Okay, these are all. Now looking into the processes, step 1, step 2, step 3. So where there are some processes, how we can allocate it. Okay, first what we will do is we will identify the major activities. Identify the major activities that consume the overhead resources. Okay, let's identify the major activities. What do? We identify the major activities. Okay, what are the major activities? Identify the main activities that will consume your overhead resources. Okay, second, identify the cost drivers. Among those activities, what are the ones that are going to increase your cost? Third, calculate the cost driver rate, right? That per cost driver, how much is it costing? As you increase the cost driver, it will go up. Okay, so how much is one setup costing? Like example, 60,000 was the total setup cost and you did 200 setups. What was the per setup cost? 300. Then example written right here. Next, allocate your activity cost. Assign your overheads to products based on how much each activity they use. Finally, calculate the full production cost. Okay, we'll look into a sum. Okay, let's just look into this sum. So consider a furniture manufacturer producing 2 products. Okay, he's making chairs also, he's making desk also. He's making a chair, he's making a desk. Chair and desk. Okay. The company has identified 3 activities. One is machine setup, one is quality inspection, one is material handling. These 3 are your cost drivers. These 3 are gonna, the more you do of this, the more cost it will incur. Okay, number of setups, number of inspection, number of movements. Number of setups, number of inspection, and number of movements. Okay, these are our 3 cost drivers. Number of setup, number of inspection, and number of movements. Okay, number of setup, number of inspection, and number of movement. These are our 3 cost drivers. Number of setup, number of inspection, and number of movements. Okay, setup, inspection, and handling. Okay, number of setups, number of inspection, number of movements. That is called cost driver. Yeah, number of setup, number of inspection, and number of movements. That is your cost driver. Okay, the first you figured out is your cost drivers, number of setup, number of inspection, and number of movements. Now coming to activity identification. What is activity identification? Setup cost, inspection cost, handling cost. This is your activities, these are your cost drivers. These are your activities, these are cost drivers. Find out the rate, just divide the two with each other. Total setup cost was 60,000. How many setups did you do? 200 setups. What is the per setup rate? 300 per setup. Second, total inspection cost 40,000. How many inspection you did? 500. Per inspection cost 80. Okay. Handling cost total 30,000. How many handlings you did? Whatever number, 10 handlings you did. Per handling cost we found out. Right? So finding the per unit cost is your step 3. Calculate the rate. That is your per unit, per cost driver rate. Okay. First you find out the major activities. Let's look into the example. What are the 3 major activities here? Yeah, Aditi, what are the 3 major activities? Activity identification. Okay. And what are the major cost drivers here, Sneha? Three cost drivers are there. What are the three cost drivers? Yeah. Setup, inspection, and your number of movements. You take the total activity, you find the number of cost drivers, and you'll find your cost driver rate. Find your cost driver rate. Take the total cost divided by the cost driver total, you will get your rate. You will get your rate. Found out the major activities, identify the cost drivers, calculate the cost driver rate. Identify the major activities, identify the major activities, identify the cost driver. Okay, identify the major activities, identify the cost driver, calculate the cost driver rate. Right, first is identify the major activities. First one, identify the major activities. Second is identify the cost drivers. Third is calculate the cost driver rate. Yeah, identify the major activities. Second, identify the cost drivers. Third is calculate the cost driver rate. Okay. So first we found out the major activities. Here in this case, setup, inspection, handling. Then you found the cost drivers, setup, inspection, handling. Then you allocated between the two. Then you allocated it between the two. When you had done the allocation between the two, right, you found out the calculate the cost driver rate, you found out the rate. Once you found out the rate, what you did, you allocated the activity cost, assign the overheads to the products based on how much each activity they use. Based on the allocate the activity cost, you will allocate the activity cost. Total it costed this much, per is this much, this particular activity used this much of it. That's it. And you will get the full production cost. That's all. Now see here you're doing it. Custom desk require 5 setups. What is the cost per setup? Into 5. First you found out the cost per setup. You took the total cost, you divided it by the number of setups, you got the per setup cost. Your custom desk, the desk that the company is making, it requires 5 setup. 5 into the setup cost per unit. Okay. Next 8 inspections. You take per inspection cost multiplied with 8. So you know for a desk how much you have to allocate. You know for a desk how much you have to allocate. Okay. So 300 into 5 will be your first setup. Then you have your handling divided by the number of units. You know per desk how much is it costing. That's it. Per desk how much is it costing. Why divided by 50? Because in one batch how many units you are making? 50 units you are making. No machine will make 1 unit. If you think of a big manufacturing unit, they have to burn so much energy, they just can't produce for 1. They just can't produce for 1. They'll produce a batch of 50, batch of 60, batch of 70. They'll keep producing batches. Okay, they keep producing batches. Okay, they keep producing batches. Okay, first you identify the major activities. Second, identify the cost drivers. Third, calculate the cost driver rate. Fourth, allocate activity costs. Fifth, calculate the full production cost. Full product cost you can calculate. Okay, so first we found out the activity. Let's quickly do it, guys. 3 activities we found out: setup, inspection, handling. Then we found out the cost drivers. Setup cost, setup is a driver, inspection is a driver, handling is a driver. Then we identify the cost drivers. We did that in the step 2. Third, we found out the rate. Right, we found out the rate here. Right, once the rate is done, once we found out the rate, we see for per product how much do we allocate. Per product, how much do we allocate? Right, per product, how much do we allocate? That is called allocating the activity cost. Fifth, we calculate the full product cost. Finally, we calculate the full product cost. That's it. Okay, so I'll show you each step over here, guys, in this example. The first step is activity identification. Are we clear with the first step, guys? Quickly. Yeah. Second, we identify the cost drivers. Are we clear with the cost drivers, guys? Okay, second step done. Third step, we find the driver rates. Are we clear with the driver rates here? Okay, once we've done that. Fourth is allocate the activity cost. Now to customer desk. 5 and 8 inspections are there, so we allocated the cost for 5 and 8. And finally, after doing that, did we find the full cost per unit? Yes, we did. All the 5 steps are right here, guys, in this example. All the 5 steps. Yeah. Activities, drivers, driver per unit, allocating it to the product, finding the total product cost. Okay. Simple 5-step process, guys. Firstly, identifying the activities, finding the drivers, finding the driver per unit cost, allocating it to the cost of the product, finally calculating the total cost for the product. 5 steps, all 5 steps done here. I will just put a different color on each of the steps here. Yeah. Sorry, will I?
Time.
Wind up. Yeah. Okay. This is our step 3. This is our step 4. This is our step 5. Okay, all 5 steps done.